Right, legends, welcome to the swing trading video. So, I'm going to keep this as simple as possible, okay? Because that's usually when I swing trade, it's really basic. There's a few things I look for. If I see them, I take the swing trade. Now, the way I approach this is usually it's either trades I have running in the background, okay, while I day trade or short-term trade, or it's ideal for those that can't really sit at the charts all day or full-time jobs. So, when I'm looking for a swing trade, what are the first few things I look for? Or what is it that I'm trying to identify? Well, number one, right, I'm looking for a clear invalidation level. Okay? Where am I wrong? Few points I need to identify. Where am I wrong? Okay? Clear invalidation level. Where is it targeting? Or where is it most likely to reach for? Okay? And then I'm looking for my risk to reward. What is my risk to reward like? Okay? Now, the third point, okay, with the swing trading, you don't always get the best risk to reward. Everybody's looking for the 10R here, the 20R there. It ain't gonna happen like that, okay? Because with the swing trading, you use wider stops, you're giving it more breathing room, etc. Okay, so the best way I can think of going ahead with this is showing you examples. Okay, now I'm going to give you a blueprint or the basics. Okay, I'll give you the basics. From that, you find your own examples. After that, I'll show you what I look for, how it looks like, the basics. Then you develop into your own style. You may add a few things. You may add, for example, you may add a moving average to help you. You may add whatever indicator. There's nothing wrong with that if it suits when you get the bias right. Okay, so we're looking for the clear validation level, where is it trying to target, and decent risk to reward. Okay, so let's start with this, the easy example. Okay, and what I'm going to focus on is this move here. Okay, what's happened here, how the trade here could have been taken. Yes, it's all hindsight, but this is how you learn. Okay, so the clear setup was when we broke above here. Okay, we had this consolidation here. Okay, this was in a range. When we broke out of the range, we're looking for trend. So swing trade is ideal when it's trending because you can start off with one position, then add and add and add, or however you want to play it. Okay, that's up to you to decide. You can make your own rules around it. Oh, I want to change this, that, the other. But let's get going with it. So let's go back to the chart here. Usually I'm gonna focus on the weekly, monthly, weekly, daily, and usually the 4 hour or H1 for the entries. Okay, sometimes even the daily for the entries. So let's make it simple now. We know, for example, here, okay, when we broke out, okay, of here, where would we be targeting the market? Okay, we would be targeting, again, comes into where's the target, one of our points, basic target here, okay, there. Then the liquidity is going to be resting here, okay, and then obviously we've got this low, and then obviously the gap fill. These are just objectives to reach for. Okay, it doesn't mean you have to trade it to the pip there. It's just trade towards that direction. Does he have a reason? Yes, he's got the reasons are these levels here, the liquidity rest in there. Okay, so let's get down to the daily now. Okay, so the daily, what's that telling us? If we look, okay, at this point here, okay, this was when we broke out of this consolidation. Okay, at this point, we're looking for longs now, so we've broken out. Okay, and if you've missed this, you've missed this. Okay, so ideally what we're looking for is, okay, SR, so I'm gonna get rid of this for now. We've identified that we've broken out of the range. Okay, we're here right now. Okay, we're here, we've broken out, and the perfect scenario would be if you could retrace into at least here, okay, or there. Sometimes that's not gonna happen. Okay, but we are aiming towards what, this here objective there. Even within the, we've got a gap to fill in there. How do we get on board? Well, if we look here, we've got here, okay, we've pulled back. Okay, we've rallied, we've pulled back. The market has made a complete retracement, and it looks as if it's pulling off, it's taking off. Now what I want to do is I want to take a trade off a key higher time frame level. So what could that be taken off of? Well, if I mark this out, the minimum SR level here, because within this consolidation, okay, we had that was the high. Okay, it's taken off of there. I'll go across there. So right here, it looks to me it's taken off. So can I take advantage of that to play towards there? Because from, if that's the objective, okay, then that's got a decent, I mean, from this level here, it's a 284 pip target. I can get at least 50 to 100 points out of that. That's what I'm looking for. I'm looking for something, okay? So then what I'll do, I'll go to the 4 hour, okay, and see if I can get a tighter entry. So it's happening, it's moving, it's moving. And what I'm looking for is a breaking market structure of a key level. So that's that consolidation, okay? Now, what do we have? We want to find out our violation level. Now here, I'm not going to have a stop loss all the way down here. What's the point? There's no point even, really, the risk reward isn't great on that. But what I can see is we've got a stop run here, and then okay, and then what I'm then looking for is a breaking market structure. What's a breaking market structure? Take out a swing high. At which point does it take out the swing high? Here. Okay, so as soon as we've taken out the swing high off of the key higher time frame level and taken the stops, now what do we have at this point? We have our risk. Okay, because we've taken out these lows, this level here, okay, that is my risk. Okay, risk. Now my entry can either be, as soon as this happens, I can enter there, because as long as this low holds, I should be correct, or I'll wait for a clean break of this SR level. At which point does it make a clean break? Well, let's mark it out. Okay, so let me mark this swing high out. Breaking close, and I don't need to go to lower time frame. I just want to see a close above it. Okay, I just want to see a close above it. Market telling me it wants to push above it. Okay, so as soon as I get this candle here, okay, break and close above on the 4 hour. A 4 hour means 4 hourly candles have closed above it. Couple it with what's happened so far. There's my trigger. As soon as this candle close, I'm in. Okay, I'm in. My risk is here to start off with. Okay, and then as it pushes away, it's then taken out another high. Okay, so where's my risk then? So what I do then is, so I'm gonna get a line. I'm gonna do it in a different color just to drag my um, risk around. So at this point, I could start off with whatever risk you want to do. This is where the practice comes in. Okay, you have to practice it, and you're gonna have to see which one you prefer, because everybody has different risk tolerances. Everybody prefers different. So if I'm starting off with my stop loss there, okay, I'm starting with my stop loss there, and that's my entry. What's my risk? It's 93 pip stop. Where's my target? 211 pips. Okay, it's more than 1 to 1. Okay, there. Now when this happens, okay, in your mind you have to keep, at which point do I say, okay, I gotta bail on the idea? Now with this, you gotta give it breathing room. It's not always gonna go straight away in your direction. Sometimes you gotta give it breathing room. So ideally, if it gets back below SR using basic SR, do not change nothing. SR first, blocks, pivots, everything else afterwards. Okay, you find I won't even use that much blocks and pivots. I'm just using basic SR. Okay, as soon as this happens, it pushes up. We've just broken another key resistance. Okay, here. There. Okay. Oh come on. There we go. As soon as we break and close above that, you're thinking, okay, we've broken one SR level resistance, then we've pushed through it, we've broken another. Okay, we should not really be coming back below here. So I'm not too aggressive with my stop. I'm more conservative, because I give a breathing room. So then my risk is there, and then if I want, if from there to there is 1R, okay, I can load more on, because if I'm reduced my risk, I can load another position on to make up for that 1R. Okay, and it goes, it goes, it goes. Okay, it's pushing. It hasn't hit our stop loss just yet. So at this point, what am I doing? Okay, do I have to hold the tick? No. Ideally, what I do is I trade my stop losses. So now what I can see is we've taken out the stops here. Okay, we've broken market structure again. We've taken out high. So then my risk is reduced to here. this low here, because I know if this gets taken, then most likely it's gonna go down, and that's a breaking mark structure to the downside then. So here it comes close to it, okay? It's going, and then it takes off, okay? So here, if we look, okay, that doesn't mean you can't take profits along the way. You can day trade towards that direction as well, but this is just using basics, okay? We just stick with the basics. So it's going, it gets close to that target, it doesn't quite touch it. There's no reason why you can't take some off here, especially when you get a fast move up like this. When you get fast moves up towards a key level and stop run, you want to be taking something off, okay? And here, okay, ideally when you get a move like that, you want to take something off. And then if it rejects, okay, that's different. So there. So at this point, at which point do I trade my stop losses now? So what I'll do is then, okay, if we've got a clearance of this SR level here, then, okay, and what puts me off, you see the difference? Here is a grind. You're more confident on trading stop. Here, so he's more of a grind, but here is a fast move up. A fast move up usually does what entices everybody to get on board, okay, and a stop run. So what I then do is, if this is the down move, okay, that smashed the market up, then we know that this should hold as a future order block, okay, or as future support. So then when this happens and this closes like this, I can, if I haven't already trimmed something, I can trade my stop loss, okay, and my risk would then be that low here, because if it's gonna go up, this should hold, okay, and eventually I get taken out, okay, that's fine, and come back to that level, okay, that's done now, okay. Now all I want to do is look for longs here, just try to make it as basic as possible as I can, okay. Maybe we can have a part 2 to this, you know, go into more detail, but for now let's stick to that. So that's one trade done, okay. Let's mark out the reasons behind it, okay. So key level here, break in market structure, okay. Then what we have done, we've identified our risk, we know our target is here, okay, working towards that target. In this scenario, trailed out, okay, if you have already taken nice stops. So it's something, it's a trade that's running in the background, okay. If it's decent risk reward, even if it's not, even if it's like 1 hour or a couple of days, does it really matter? It's something, okay, while you do your other thing. And like this, you can have multiple trades running. See, the great thing with the swing trading is because you don't have to set your charts all day. You can just have multiple, like maybe one on the cable, one on the euro, another on the, for example, euro Aussie. You can have multiple trades running, you know, and over a couple of days you think, hang on a minute, 1 hour here, half an hour there, 2 hour there, it all adds up, okay. That's that. So let's get rid of all this and let's look for another example now, okay. Now keeping in mind the same premise. What was the premise? Looking at the daily, okay, that we've broken above major, out of major consolidation here, okay. Let's look for another opportunity, okay. So another thing to keep in mind is let the trade come to you. When it's there, it's clear, okay. Don't chase it, let it come to you, let it be crystal clear. When it's crystal clear, then you step the fuck into the market, okay. So let's go again. So that's major SR level here, okay, but we've got a bullish bias, okay. We've broken out, okay, that's just the minimum area. We've broken out a massive consolidation, okay. What's going on here? So if you're thinking, no, with for example, the dollar index is out, for example sake, at this point the dollar index was rallying, dropping. I won't go back at charts now, but if you look back at the charts, the dollar index was dropping, so we're expecting rallies and the majors were bottoming out. So what do I do in this situation? Well, if that's resistance, okay, and then turn support, and then, sorry, if that's resistance, okay, and then turn support, and they broke back below, we expect a resistance. Hang on a minute, what's going on? So then you gotta look at reason, okay. You may say, okay, I'm gonna let it unfold, and if it's gonna go lower, why is it going lower? Well, you can clearly see we had a inefficiency to fill in into here, okay. We had a fast move up, okay, and that's just been filled in. That's right. So at this point, you're asking yourself, okay, how do I get on board this trade? Okay, what do I have to look for? Again, you want to look for market to tell you the low is in. So far, we've got a low here, we've got a stop run, okay, into SR. So if we mark this out, this is a whole SR region here, okay. What we're looking for, the breaking market structure, so we can identify where our risk is going to be, okay. So we know that if this high breaks, then we've got a breaking market structure, okay, which means that this low would be our future risk, and then what we do, where's our targets? Well, we're still going for that high there, but short term we've got more targets now. We've got this here, fill all this in, liquidity resting here, and then there. So where are we trading towards? If we break market structure, we're trading towards this, we're trading towards that, and we're trading towards that, okay. So we've identified possible risk if it goes to plan, target, okay. So once we get the confirmation, we're going to look at our risk to reward. Let's go forward now. There, we're going to break your market structure now here, okay. So how do I play this? Well, you could even do this, it would be completely valid. Yes, we've got a, don't have a daily close, but this, with the overall context, okay, in mind, this is why context is so important. Key level, okay, step one, stop run, okay, break your market structure. Now I can enter my, you can enter as soon as this breaks, okay. I'd enter, you could, one scenario is you could enter, a risk is there, short-term targets there, trim some off there, and then there, okay. Now can I go to the lower time frame and get a better entry? Yes, you can. So in this case we'll go to the 4 hour, okay. So let's go down to the 4 hour now and see if we can get anything better. So what you could do is look for bullish candle closes. So we know this is a SR level here, okay, and we've got a clean break here. So if you're not comfortable waiting here, you say, most likely when this happens, we get a pullback. Yes, that's fine, okay. But if you don't have time, we can say, well, I'm gonna enter here. Well, I'm gonna enter here. That's scenario one with my risk there because that's the low. I would give it wider stops. So one way is that as long as this low holds, I'm looking for longs. So you could say, well, I'll enter a small position here. This is an example. I don't know, a third, and then this is another SR level, I can enter another third, okay, and this is another SR level, I can enter the final third. It's up to you how you want to do it. This is where your back testing comes in. I'm giving you a brief blueprint, okay. So I'm just gonna go with one entry for now, okay. The bait, just keeping it simple. I'm gonna say, okay, I want to wait for a bit more confirmation. So let's look at this now. We got a spike here, okay. Everything's covered now. We've got our risk, we've got the breaking market structure, and we've got the targets, okay. Obviously there, and obviously there. Okay, clear targets to reach for. We got up move, then we got a down move here. So what I'm looking for, and then I'm looking for bullish price action, and I don't have to wait for breaking market. So I'm just looking for bullish candles off of a KSR there. See this here? It bottoms out here, and this is a bullish candle. I'll go long on the close of this, or if you want a further confirmation, a close of this. It's up to you. I know my risk is there. Yes, it's a wider stop, but then it pushes right up, okay, and then obviously hits targets, okay, there. So it's the initial target there, and then there, okay. So what do I do in this situation now? What trade management, okay? So okay, it's all good saying, okay, hindsight, it's gone up there, but how would we be dealing with the situation at hand? Well, we know, okay, this was a target there, and this was a target there, okay. Look what we've done now. We've cleared, okay, we've cleared this SR level here, okay. And what we want to do is we want it to stay above it. So it depends on how aggressive you want to be. If I can then go to H1, okay, going forward. Oh, I lost it now, won't I? Okay, well, let's stick to the H4, okay. So we can clearly see, okay, we've pushed up there and we've made a swing low, okay, and then we've made a higher high, okay, we've pushed up again. So then what I do is I get my magical, where's my risk at that point, okay, get rid of this. My stops are then, ideally I like to get trailed out of these, okay, just so we can get the majority of the move is there. It pushes up again, okay, and keep in mind it's this level here, this is the key resistance level. Why this key? Because that led to 340 odd pip sell off, okay, or 300 odd pip sell off. Makes a low there, makes a low here, okay, and then it gets back above. So at this point, what I'm thinking anyway is, okay, we've broken key SR, okay, here. We found a bit of resistance there, we've broken above it, and then we couldn't get close below it on a H4 basis, and then finally it's starting to turn again. So now, because I've already captured so much of a move, okay, I can trade my stop losses again. At that point, where would my stops be trailed? Here. So I've locked in about 100 odd ticks, okay. Going forward, now it's up to you. Do you want to trim some off here? Ideally, you can trim some off here. Any pullback, just load up again, okay. So for example, say if I was to, I don't know, trim it off here, okay, I don't know, a third of it, and then when it pulls back, okay, and say it's just an example, say I loaded here, I've just loaded that whatever I've trimmed off 65 or 50 60 pips better off, okay, as long as my invalidation level is still holding, and then I get taken out the remainder, okay. So yeah, that's that. Now we're still going in with a bullish bias, okay. We look for a reason to enter. So at this point, that's another trade taken out. We're still working towards, let's remind ourselves, it's getting a bit messy now, so let me clear some of this up, okay. We're still aiming towards these levels here, okay. So let's go. When do we get our next target or next setup? So let's go back, okay, let's go back, okay, that's done now, okay. Let's go, let's look, where's the next setup? We got potential SR level here, we got potential SR level here, okay. Now we do not know where is it gonna hold, okay, but we wait, okay, what's happening here? We get some bounce there, okay, and then it comes back down to here, this SR level here, okay. Resistance becomes support. Now that's not enough, it's got to prove itself, okay. Now this is where you've got plenty of time. You're dealing with a 4-hour chart, a daily chart, to make your mind up, okay. So what do you want to see? Again, where's my invalidation level? Once market proves to you, it's giving you validation level. We have our targets in mind, okay. So what's it got? This was the up move. If I zoom in a bit, where's it gone? Yeah, okay. This was the up move that had to move down, so we got a stop run into a key level, and it's held. Now at this point, you're saying, well, technically the swing high I'm really looking for is here. And personally, I'd agree with you, okay. So if you're not willing to take it here, so for example, if this happened, you could say, well, it's come off a key high target level, that's my risk, okay. But you sometimes you may say, well, no, I want to see this swing high break because that's a more significant high. That's fine. Let's go forward now. How we tackle that? And that would mean that if that's the case, we've got a range low in place and a deviations in place, okay. So if you were the type that say, okay, no, this is enough, what would be the supporting factors for this idea? Well, we can clearly see that here we had a low, we deviated it here, got back above it, clean break, you should have found resistance there, but then gets back above, close above, finds support there, still stays above it. That could be a more aggressive one as a possibility, okay. Your risk would be that low here, okay. And say if it's more aggressive, say, well, I'm only going to use a quarter of my size or a third of my size, okay. Then going forward, there, I've got a breaking market structure. Now I'm more confident now, okay. I've got what I wanted now. I know this has to hold now, otherwise I'm completely wrong on the idea, and I'm aiming for here, here, and the higher levels I've mentioned, okay. So going forward, okay, where do I want to enter? Well, we've got this SR level here, okay. Now ideally you'd say, oh well, I want to enter in this block here or this level here. Sometimes market's not going to give you that. So what I tend to do is, in this situation, is a swing trade. I'm okay with the tighter stop. I just want to see some evidence that the market's holding. So it breaks and closes above here. It comes down here, respects this SR level, okay, and then closes back above. That would be my entry. As soon as this closes, my risk is there. Now, what's my risk to reward on this idea? It's not the best. It doesn't necessarily have to be 1-to-1, okay? But is it high probability? Yes, it is. I mean there, that's not even 121. Well, 121 would be there, but okay, we don't know this move's gonna happen until it happens. Okay, and then it starts to turn. So let me just mark this out using SR only. Okay, this is not even using blocks or anything, just basic SR. That's all I use really for my swing. Okay, so that's done. So more conservative entries would be, or more confirmation entries would be when you start getting candles closing and going your direction. So for example here, close above, then you get a down candle. So you want to see some sort of like, you know, continuation higher. So then we get another bullish candle here, another bullish candle here, and it's starting to push away. So as soon as it starts to push away, okay, then you could enter there, okay, or enter more position on when it's confirming your idea. Okay, so yeah, that's just, I'm just giving you the basics. Okay, it's up to you to go down and look for examples of how you could do it, and that's how you learn. Okay, I'll give you the basics, you go learn. Okay, so obviously in this scenario, okay, it goes and hits our target. Okay, so I hope you start to get an idea of what's the basics. Key high time frame level. Okay, that's where you're hinging the trade-off. Stop run, so you can get your risk and then clear target. Okay, and then just manage your risk after that. Okay, and that's that. That's done. Okay, that's another example done. Okay, let's look for another example now. Okay, you're in the same pair, we're still working towards that target. Okay, yes, this is a hindsight, but it's just examples to use. Let's go down again. Okay, say we've been taken, so where were we last? Okay, and we wait for the next setup. Okay, we were okay here. Okay, now obviously we've just taken out keys, key level here, and these key stops here. Okay, so how would, oh sorry, how would you manage this trade? Okay, again, the way I would have done it is, okay, we've got SR here. Okay, but what would have put me off holding it too long is this fast move up here. Whenever I see a fast move taking out stops, that's usually my trigger to really tighten things up. Okay, or trim some off at least. Okay, so at this point, okay, it's done that. I would trim quite a significant amount off, and then my risk would have been trailed as soon as this started to turn. Okay, and form this candle here, my risk would have been pushed into there. Now if you want further um, reasons to exit, okay, you can use fib extensions. So for example, say we've got that swing high there, that swing low there. Okay, targets, you know, fib extensions can be used as targets 161.8, 200%, and then that's another swing there, 261.8, and then there. So from that swing high to that swing low, we got 127.2 extension. Okay, and that's showing resistance, so that would have been a good area to take some off. But I'll do another video on just fib extension and profit taking. This is just on swing trades. Okay. Okay, that's that done now. So what do I do next? Let's go forward now. Okay, I'm taking out of this trade and I'm thinking, okay, I want to get back on board cable. I've still got my bullish bias in mind. Well, where's my key high time frame levels that I want to hinge the trade off of? Okay, well, I've got a level here. Okay, we also got this level here, so I'm push it forward, push it forward. Okay, it comes here. Okay, which is within this block here. Okay, SR, and then we've got a block that led to the push up. Now, what am I waiting for? The breaking market structure. So where would I get that breaking market structure? These highs here. If these highs here got taken, okay, that's my breaking market structure. Why? It's coming off that key high time frame level. Do you have good reason to go higher? Got this here, that here, and the levels I mentioned up, further up. Okay. Okay. So let's go forward now. Do I get the entry, or do I get further price action to give me an earlier breaking market structure? With this example, now we can see we've got a low, we got a swing low like that. So there, if it breaks that, we're already coming off the key high time frame level. If that gives in, that's technically a breaking market structure now. Let's go forward. There. So what I would do is I can enter here, close of this candle. My risk is this low here because we've done this. Starting to push up. So as soon as that happens, your minimum entry can be there, your risk is there then, okay? As soon as I'll enter on the close of this candle here, where am I driving it towards or aiming towards? There, there, and then whatever else that I've mentioned higher up. So let's drag this forward now. There. we got a target hit. Okay, so what do I do in this situation? It's getting messy, but just bear with me. Get a risk. Where's my stop? How did I trail my stop losses? Okay, would have been, so starting off, my stop loss is there. And at what point would I have trailed it? Well, here. Okay, this is our entry there. Here. Okay, we pushed up. That's fine. Come back down. We've got a stop run now. Okay, and then an impulse move away. So then my risk is gone from this low here, there, to that red level there once this happens. Okay, once we get taken that high. So I've trailed something. It's about reducing your risk as much as possible, logical areas. Okay, and as soon as I've got that, then I could easily enter another position now, can't I? Because I've got my stop run, I can reduce my risk now. Okay, so it's up to you how you want to do it. Let's go. So here it's hit my target now. It's hit my target now. Okay, and I want to see it stay above. As soon as it starts breaking down below it, that's usually my trigger to exit the position. Okay, because I've captured from here, my initial entry, I've captured 90 odd ticks. That's a swing. Okay, not the best risk to reward. So from there, that's a 97 pip stop, 97 pip target, 1 to 1. Even say 0.7R, that's fine. Okay, and that's that. Okay, so that's just an example. We look for stop runs. We're trading towards a higher time frame direction. We're looking for stop runs. We look as soon as we got a risk, and that's that. Okay, so that's cable done. Let's pick another pair now. Okay, so okay, let's move on to dollar yen now. Okay, and what I'm going to do is introduce a bit of ranges. Okay, so I think I'm going to do this in two parts. The first part is getting the basics of what I look for, and then the second part to it would be using ranges in detail with this. Okay, so what am I doing now? I'm marking up my range levels. Okay, on a weekly basis, I can clearly see that that's a range low here. Okay, and that's a range high. Why? Because we deviated it here, confirmed it, deviated it here, got back below it, confirmed it, deviated it here, and deviated it here. Obviously, this is hindsight, but this and this would have been enough for me to create some sort of range, because this is we're trading within. So let's get more precise. Okay, so we've got the range high, which comes in at 114.363. And this is an example of trading within a range. So on a lower time frame, it looks like a big trend, but on a weekly, it's still a range. Okay, maybe a couple hundred pips, maybe 1,000 pips, who knows? But it's some sort of range. And this is the range low. Low comes in at 108.125. And then what I'm gonna do is, so I'm gonna do these in different colors. So when I'm going through it, it stands out. Okay, got that there. We've got that there. Okay, and then I'm going to mark out the mid-range, the midpoint. 114.363 and 108.125. So the mid-range comes in at 111.244. 111.244. Okay. So how do I play this? So it's all good. All this has happened so far. So let's go now. Let's start. There's one set I wanted to go over is this here. Okay, and then there's another here. Okay, so let's start with this one first. Go to the daily. Okay, so on the daily, we can see we're at key support. Okay, we're at key support on the daily. We've come all the way back down. Okay, we're just picking a reason for it to enter. Okay, we've come down and get rid of this now, and we've taken out some stops here. Okay, taken out some key stops there. into a key level, which is the range low. Now, do we know, is this going to have follow through? Hang on a minute. Yeah. Do we know if this is going to have follow through? Or is it going to snap back within the range? We have to wait and see. Let market tell us. So far, we've broken, we've closed, very bearish. Now, for me to short this, okay, and a break out of a range, I need a clean break. So for example, let's say here, clean break, then around retest, and then find resistance there. If I get a breakdown, that tells me that it's breaking out of the range level. I'll mostly continue lower. So this would be the short scenario if we got this. Otherwise, if you did this and then go back within the range and close back within the range, and that means that's a bullish scenario, and this was just a deviation of the range. So let's see what happens now. Go forward. There. As soon as we get that, it's game over. Okay, and this was just a trap. So then where would we be working towards? So let's get a clear direction. I know we should come back below the range low. We've already taken on the stops. There's no need to go back down there again. Another thing is, where would we be targeting? Well, it's short term. Okay, we got this daily block to target here. We got stops resting there. Okay, or liquid resting there. Back into this block, which would be take us back into the mid range. A clear break at the mid range, we start working towards the range high. And range are probably easiest when you got a weekly range or a daily range, easiest to probably trade. Okay, so what do we do? Let's go to the 4 hour now. Go all the way down to the 4 hour. Okay, and let's see if you can find a more earlier entry. Okay, now in this case we do have a gap here, but these gaps don't have to be filled in straight away. Okay, going under the premise that's not going to be filled in straight away. Okay, my entry could have been based on basically, would be valid. Okay, could have been as soon as it gets back above. Okay, and this SR level here, it's broken above it. So here it's taken this out here, this kind of stick here, and then rejected. So at that point, you could be thinking, okay, we're gonna get a gap fill. Then it's closed back above it again, and then you're thinking, okay, for example, say we had a gap here that wasn't filled in straight away. So thinking, oh, hang on a minute, why is it not coming back below here? It's closing back above this SR level there. That could be an entry. Okay, now the risk would have to be, the way I would play it would have still swing basis. Remember, swing basis has to be the swing low. So what's that? That's a 100 pip stop. Okay, where am I targeting? Each swing low in the first target is nearly 1R, 90 odd pips. Gap fill there towards, the direction I mentioned, towards the mid range. Okay, so how would I enter? Say I've entered here. Okay, and my risk is here. Okay, so let's get this out. Okay, there. So I've entered. As much. Okay, it's gone. Okay, now what I could do, I'll mark this out. And what have we done? So this is now trade management. Okay, so we've taken out this swing high. Now this could be a top in possibly, and then it breaks down. Who knows? It's come down. It's taken it out. Okay, I do want it to stay above here. It's broken back below here, but okay, I'll give you another. There, it's come back above. As soon as it gets back above it, my risk is reduced. What am I doing for? I'm looking to reduce my risk. Okay, with good reason behind it, not because I'm scared of that position. There has to be some good reason behind me reducing my risk. Okay, so hang on a minute. So let's move that across there. As soon as we start see market turn, okay, my stop loss under that swing low. It's already broken back and closed back above here. It's starting to bottom out. Okay, just like we showed with cable. And then it confirms here. So I could enter another position here. Why? Because I've reduced my risk. I could enter anywhere now. The moment I've reduced my risk, I could add another position on. I'm still aiming for obviously the gap fill, the swing high, and the targets we mentioned. Okay, so that's up to you. Things practice would come up now. We've filled in the gap. Okay, good idea to take some off. Okay, at which point would I trade my stops? Not yet. There. So what do we have here? We got SR here. Support. So I'm going to do it in a different color so it doesn't get in the way. Okay, there. So as soon as we got this turn there, okay, my risk then is reduced to there, this swing low here. Okay, so I've locked in what? So 144 odd ticks. Okay, it's not bad. It's taking time, but that's how you do it. And then it's taking a swing high here. What did we say about a swing high? What we're looking for is we're looking for a breaking mark structure to the downside now. So far, okay, I've got no reason to exit yet, as long as this low holds. Okay, because if this is the down move, okay, that pushed the market up, the minimum support levels here to possibly compound, my risk is there. Okay, now let's look at what's happened. It's forming structure here now. So this is a battle now. What do we do? This is key resistance. Why is this key? Because that high led to a 300 pip sell off. At the same time, we're coming off of key support. So we've locked in profit. Okay. Hang on a minute. Phone. Okay. Sorry about that. We've got a high, a key resistance. So where we look for trades, we're looking at for trades a key high type of resistance. So think of it like this. Now there's another way of thinking it is, if we were to short this, what would we be looking for? Okay, looking for shorts. For example, if I'm long, a rate to take profit is, how do I short this market? Because at the moment you get a short setup, that's your trigger almost to exit the long. So that's another thing to think about. So we come to the key high time frame level, we're taking out the stops. Okay, push down. Okay, pushed up again. Where's my stop risk? Well, now that we've broken back above here, okay, my risk would then be reduced to this low here. Okay, now which one would have been stopped out? I would have been stopped out on this spike here. There. Because if it's turned like that now and closed back above it, it shouldn't come back down again. It takes me out. Okay, we got a deep stop run which is going to happen, and then eventually goes to the mid range. But we've locked it in. So that's one way of looking at things. Okay, that's one setup there. Let's go to another setup now. Okay, so on the daily, I spoke about one another setup I was looking for. I'm just picking cherry picking setups here. Okay, just clear ones, just so you can train your eye. And this is what I'm saying. If you can do this and everybody understands it, I got a good basis to go with, and then we can go deeper into more more deeper into it. Okay, not that you'll need it, but just for those that want to. Okay, which would have been in the weeks back in the weekly would have been here. Okay, focusing on this here now. Okay, here. So let's go down to the daily. Okay, where are we? Come on, come on. Okay, here. Now, ignoring what's happened here. Okay, assume we're back above the range high now. Okay, you've just seen the market and it's like this now. How do you enter? Okay, well, but ideally, where's our key? Is all this has happened right now? Okay, what do we want to do? Okay, so in this case, okay, this is show like a little stop out as well. Okay, or maybe a trailing. We've come up. Okay, where's our key SR? Well, our key SR is this range low here. Okay, and you can easily even pull it into here. Okay, what else do we have? We have, this was the up move. Okay, that led to the break back below the range low. Okay, so if they were selling here previously above it, if you break above it, we expect some buying. Look what's happened here. We've got a stop run. Okay, into a key level. This is a key level, doesn't necessarily have to come back to range low. We look for a breaking mark structure. This has a broken mark structure? No, it hasn't. There is broken market structure. Now if I was to enter at this point, okay, ignoring what's, pretend you haven't seen that, my entry would be there. Where's my risk? This low here. Why? Because this, we took out the stops here. Okay, so if that's my entry, I'm targeting, the short term is going to be here. Do you have a good target to reach for? Well, this is where you got to ask yourself then, and this is where your back testing comes in. You got a target objective here to reach for. Okay, this was the up move that led to the sell-off. We didn't quite reach it there, but can we reach it there? Okay, so I'm long now, and obviously on low time frame we'll get tighter entries, but this is on daily. Let's go to the 4 hour. Okay, Alright, mess now. Go to the 4 hour now. Okay, and time it. Now on the 4 hour, you can technically say, well, this is a breaking market structure. So on the daily we couldn't see, but on the 4 hour you can. So some people aren't able to. So we'll take both scenarios. Okay. Okay, we've got a stop run there. There we've got a breaking market structure there. Okay. So on a daily basis, if you're waiting for that break. On a 4 hour, that's fine. So as soon as that breaks, that's a valid entry there. Okay, here. This is on a 4 hour now. With your risk below here. Why? We've taken out the stops there. That's my entry. Any pullback, as long as this low holds, it's fine. Minimum entry there. Targeting this high there into that block there. Okay, so on the 4 hour, okay, it's gonna hit that target. Now, okay, so on a daily basis, my trigger would have been here. That's that close there. Okay, so then you close back above these highs here. So how do we enter this? Now you gotta ask yourself this. This is the question you gotta ask yourself. If I'm entering here, okay, so for example, say here, okay, that's the daily close. Well, what's my target? It's down here now, isn't it? Okay, it's not much target. It's short-term target, and then there. So if I'm aiming for the mid-range, and I've got strong beliefs going to go a lot higher, 118 pip target and 141 pip stop. Am I comfortable with that? Now you could argue that, well, on the 4 hour, so this is where it comes down to managing it on the 4 hour. If you're able to look at the 4 hour, so for example's sake, let's manage. Let's go over the 4 hour management, and then we'll go over the daily management. Okay, so I don't think it should be a problem able to look at your chart once every 4 hour candle close. But okay, so once we've got this breakout here of this high here, it's broken out of a range, hasn't it? This is the range. Okay, so at one point we started off with our risk there. Okay, and then once it broke above, okay, the range high, we've reduced it to here. Okay, now on a day, so now that if this is my stop loss on a 4 hour, okay, then if you close on the daily, that's just further confirmation. A daily close above a key level, which is in this case a range high, is just further confirmation. So you could have added there or taken an entry there. Okay, so at that point, because we've already identified this on the 4 hour, instead of having a stop loss there, if I've entered just on the daily basis here, I could have entered there. My stop loss is here now. So what's the risk? The risk is 100 pips. Now short-term target is only 40 pips, okay? But if you really got belief, it's going to be there. So again, let's manage it. Let's assume we've entered this, okay? We're going for that level there. So this could be the first objective, take some off, okay? Especially if you've entered on the 4 hour. But secondary objective is, okay, let's manage this. Now that it's broken out of the range, it's pushing up. We've hit our resistance now, okay? So what's happened now is I'm going to trade my stop losses now. Why? Because key support, which is the range high, it's made a move away like this. So we shouldn't break that low now. So my stop is now reduced to this once we got that move there. Okay. So as soon as we get a close like this candle here, okay, then my risk is reduced, okay, because we shouldn't really be coming back below it. Okay. And especially if we went to resistance. So I want a quick reason. So for example's sake, if I think of it, well, we've identified that this is a 4-hour block here, okay, which is key resistance. Well, that daily block there, okay. I've taken, so if I go to the daily, let's mark this out properly. Daily block there, we've taken out stops here. Okay, so if I go back to the 4-hour, okay, remember what I said to you. If I'm looking for a short scenario, okay, what would I be looking for? Because if I get that short setup, that means that's my trigger to close the longs. So if I look at this and that, this is where my stop loss is at. So this is the up move, or this is the down move that pushed the market up into resistance. Okay, now if it was to sell off like this from here, we're into key daily level, that would then become a breaker, and then I'll be looking to short, or that could be my reason to exit as soon as that breaks. So if it breaks this and that's my reason to exit, that means my risk is just here then. Okay, so there it's pushed up, there it's hit that level. Now how do I manage this? Well, if this is the down move that's pushed the market up, okay, my risk is then reduced to here, okay, because if it breaks this, a possible future short setup, because it's coming off a key higher time frame level. and then there, I'm trailed out there then. Okay, I could have possibly, I wouldn't really enter there unless he made a clean break of the mid range, which we already discussed. Okay, then you could have had trim some off you on a rejection of that, or be happy enough to get trailed out of there. Now, how much potential pips would we have made? Okay, so if we go on the 4 hour, okay, if that's the trigger there, and we trail out of there, that's 113 pips. Okay, with the 82 pip stop. Or if you enter the daily, okay, that it's about 54, 55 odd ticks. Okay, so that's that. So these are just a few examples I've given. Okay, I want you to really go over this, okay? And then once everybody understands the basics, we'll take it to the next level then, which including more range work, okay? And yeah, okay, because I use a lot of range levels with these as well, but these are just the basics to get everybody started, okay?